Warren Buffett stated in his annual shareholder meeting released on February 22nd that he is not hoarding cash. The letter accompanied Berkshire Hathaway's 10-K report includes financial results from the last quarter, which is Q4 of 2024. According to the latest report, Berkshire Hathaway's cash pile grew even larger in Q4 of 2024, reaching a record high of $334.2 billion at the end of the year. This marks a $9 billion increase in the last quarter compared to the third quarter of 2024. Warren Buffett remains a net seller for equities, marking 9 consecutive quarters of net selling of equity securities. There has been many reports and questions about Warren Buffett's or Berkshire Hathaway's cash pile or cash position in recent years. According to one of the sources, its cash and cash equivalent now makes up 53%. Right, the green line over here, 53% of its total stock portfolio, meaning over half of its portfolio is in cash and short-term Treasury securities. Warren Buffett is likely frequently being questioned by investors about Berkshire Hathaway's growing cash position, and it may be a point of frustration for him. In his annual shareholder letters, he addressed this issue, explaining why Berkshire's holdings are so high for cash. One key reason is that the high Treasury yield in 2024, which made short-term security an attractive investment. Buffett stated in the letter, in 2024, we were aided by predictable large gain in investment income as Treasury bill yields improved, and we substantially increased our holding of these highly liquid short-term securities. And in the letter, Warren Buffett emphasized that Berkshire is not hoarding cash, but rather deploying capital into equities in 2 different key ways. The first one is wholly owned subsidiaries. Berkshire owns and controls 189 businesses holding at least 80% or often 100% of them. These are businesses like Geico, See's Candy, BNSF Railroad, and these subsidiaries functions like equity investment, but they are not publicly traded. And the second key way for them to invest in equity is through public traded stocks, which is the traditional equity investment. Berkshire holds minority stakes in major companies such as Apple, American Express, Coca-Cola, and Moody's. At year end, the value of the publicly traded investment stood at $272 billion. Buffett noted that while Berkshire's holdings in marketable equities declined from $354 billion down to $272 billion in 2024, the value of its non-quoted controlled equities increased, pretty much saying his wholly owned subsidiary are increasing in value, which means he's investing in equity through that way. Okay, and he reassured the shareholders in the letter by saying, despite what some commentators currently view as an extraordinary cash position by Berkshire, the great majority of our money remain in equities. While our ownership in marketable equities moved downward, the value of our non-quoted controlled equities increased and remained far greater than the marketable portfolio. And Berkshire's shareholder can rest assured that we will forever deploy a substantial majority of their money in equity, mostly American equities, although many of these will have significant international operations. And Berkshire will never prefer ownership of cash equivalent asset over the ownership of good businesses, whether controlled or only partially owned. So it's pretty much saying the public perception of Berkshire is wrong because most people view Berkshire's portfolio only through the lens of its publicly traded stock holdings, like the Coca-Cola, right? Like the Apple, like the Bank of America. But when comparing its cash position, it's typically compared against holdings like these marketable equities. And rather than considering its subsidiary investment, leading to a perception that Warren Buffett is sitting on an unusual large amount of cash piles. but I did some research, of course. I did some calculation. The number is actually telling a different story, because if you look at Berkshire's balance sheet in the latest 10K, the number is telling a completely different story, because this is the balance sheet, right? If you look at this, these three lines representing cash, cash equivalent, and short-term treasury bills, and this line over here, this is 2024 and 2023. You add up the 2024 cash and short-term treasury bill, and you minus the sum in 2023, you're seeing an increase of $166 billion in cash and cash equivalent and short-term treasury bills. And the total asset, if you use the 2024 minus 2023, only have an increase of $84 billion. Okay, so there's a $84 billion in total asset increase, while there's a $166 billion in cash and short-term treasury bill increase. Okay, so this is a substantial increase in cash. It's actually suggesting a cautious approach. So his explanation is valid in the letter, but it seems more like a downplay of the fact that Berkshire has been favoring cash and short-term security over stocks. So as a conclusion, look at what he did. Don't just look at what he say, right? So it's this is telling us Warren Buffett remain notably cautious in 2024, and his action indicates that he found stocks less attractive compared to cash and short-term treasury bills in 2024, despite his explanation to shareholders. Thank you very much.